Dividend stocks are companies that pay out a portion of their earnings to a class of shareholders on a regular basis. These companies usually are well established, with stable earnings and a long track record of distributing some of those earnings back to shareholders. It's important to note that not all companies make these payments. High-growth tech stocks and biotechs often forego these payouts, instead reinvesting in research and development to enhance existing products or create new products that generate big sales. Monthly dividend stocks and funds have a payment schedule that actually aligns with your mortgage payment, utility bills and other monthly charges. Below are some of 2021's best monthly dividend stocks and funds for easier income planning. 1. OneMain Holdings Inc. OneMain Holdings is a financial services holding company focused on consumer finance. Their dividend yield is 13.06%. Through its subsidiaries, OneMain originates and services secured and unsecured personal loans and offers a range of credit insurance products. The company operates a network of 1,500 branches throughout the U.S. and provides a digital platform that allows customers to apply for products online. On April 26, 2021, OneMain raised its minimum quarterly dividend by 56% to 70 cents per share. The dividend is payable on May 13, 2021. To investors who hold qualifying shares in the company at the end of May 6, 2021. 2. Realty Income. You can't have a list of monthly dividend stocks and not include Realty Income. While several REITs pay monthly dividends, this company's monthly payout is so critical to its identity that it actually trademarked the Monthly Dividend Company as its official nickname. Realty Income yields about 4.1%, which is attractive in a world in which the 10-year Treasury yields only 1.6%. But it's the consistency that makes the stock so compelling as a long-term income play. As of this video, Realty Income has made 610 consecutive monthly dividend payments and has raised its dividend for 94 consecutive quarters. And since its initial public offering in 1994, the dividend has grown at a compound annual growth rate of 4.4%, well ahead of inflation. 3. AGNC Investment Corp. AGNC is a real estate investment trust, or REIT, meaning it can avoid certain corporate tax burdens simply by virtue of delivering 90% of taxable income back to shareholders. However, the company is not a property manager but instead invests in residential mortgage, pass-through securities and other mortgage-related investments that are guaranteed by U.S. government-sponsored enterprises like Fannie Mae or Freddie Mac. Shares are up 21% or so year-to-date, thanks to a strong housing market and rising interest rates. Their current yield is 7.72%. 4. Annaly Capital Management Inc. Annaly Capital Management is a diversified capital management company that invests in and finances residential and commercial assets. Its investment strategies include agency mortgage-backed securities, residential and commercial real estate, and middle-market lending. The company has about $100 billion in total assets. Their dividend yield is 9.69%. 5. Prospect Capital. Prospect Capital provides financing to middle-market companies. Its portfolio is mostly debt-based, with 80% of it invested in first-lien loans and other senior secured debt. It's also well diversified, as its portfolio is spread across more than 120 companies in 39 industries. Despite a rough year, non-accrual loans remain a very modest 0.7% of the portfolio, and that's likely to improve as the economy continues to heal. Prospect Capital tends to be a little more aggressive in its dividend policy. Rather than manage the payout with semi-annual special dividends like Maine, Prospect chooses to simply pay a higher regular monthly dividend. Prospect's shares have been shooting higher in 2021 but still trade at just 88% of book value and yield a hefty 8.1%. Conclusion. Dividends are a great way of rewarding long-term shareholders. A dividend investor has the ability to construct a portfolio that could generate a sizable income stream. Being a dividend growth investor can potentially change your mindset from a short-term trader, speculator, gambler, to a true investor, a business person whose portfolio represents a tangible cut of global corporate profits. That is how regular people can get a piece of the American dream and achieve the kind of increases in income and wealth that lead to financial independence. The key is to get started as soon as you can and stay disciplined to maximize the benefits of being a dividend growth investor. If you have any further questions, make sure you leave a comment below. If you'd like more daily finance content, then make sure you hit that subscribe button to join our community of aspiring entrepreneurs and investors.